Hello, I'm Ram Shivakumar. I'm a professor, writer, and investor. I've been teaching courses on economics and strategy at the Booth School of Business for MBA and executive MBA students for 22 years. For the last decade, I followed this practice of sharing a bi-monthly email update with my current students. In each email, I highlight a few events and news items from across the business world of relevance for anyone interested in economics, management, and public policy. I'm now going to share this update with you on my YouTube channel. This is the second of what I hope will be many such videos. In today's video, I will discuss a few news stories that have caught my eye over the past few weeks, and I will also briefly discuss a book that I've been reading. My first comment is on the evolution of the markets for AI-related investments. In the months after the introduction of ChatGPT in November 2022, investor interest in AI and AI companies began to grow. Investors with connections invested in private companies like OpenAI, which was valued at $80 billion last month, and Anthropic, which was valued at $18.4 billion a few weeks ago. Then the attention shifted to NVIDIA, whose chips are essential for AI computations. In November 2022, a share of NVIDIA was worth $120. Today it's worth $880, and the company's price to earnings ratio is 73. In the last few months, it has become clear that other market segments, such as servers, also stand to benefit from the AI boom. Dell shares are trading at $127, 3 times higher than it was a year ago, because its servers are embedded with NVIDIA's chips. And shares in Supermicro Inc., another company that produces servers, now trades at $958, 9.5 times greater than it was a year ago. The AI boom will likely play out for several more years because it will take companies time to figure out how to use AI to operate their businesses better. I expect that there will be a few big winners and many also-rans as this plays out. Talking about AI, a sector that is in the throes of change is search. Google is rumored to be contemplating a new business model, a premium model for those looking for AI-powered search, and a free model for those content with traditional search. In the premium model, users would pay a monthly fee to get ChatGPT-like answers to questions. At first blush, it would seem that this change in business model is being driven by cost considerations. It will cost Google tens of billions of dollars to acquire the computing and processing power to conduct AI-powered searches. But competitive considerations are also spurring this change. OpenAI and Microsoft have committed to spending $100 billion on training and running AI models. And Perplexity, an AI-powered search engine, recently introduced a $20 per month model of unlimited search. Suddenly, search has become a more competitive sector. I expect that there will be more new players in this space. My third story is on the management consulting industry. In this week's issue, The Economist opines that the golden age of management consulting may be coming to an end. I think they are being overly pessimistic. Yes, the revenues of the world's top consulting firms, Bain, BCG, McKinsey, Accenture, Deloitte, PwC, Ernst & Young, and KPMG, the Great Eight as The Economist calls them, have grown more slowly in the last year than the 2 years before that. Yes, these 8 companies overhired in 2021 and 22 when the going was good and have now been forced to reduce their headcount because more people are sitting on the bench. And yes, the last few years have taught them some very harsh lessons. That it is far easier to dish out advice to others than it is to solve your own problems. And that speaking about values is far easier than living them. But there are several reasons to believe that the demand for management consulting services will not go away. For one thing, the world is getting more complex and companies do not have the people or the capabilities to solve them. Modern technologies may work miracles, but people still need to know how to use them. Reglobalization and reshoring means that companies will need to rethink and rework supply chain management, and ESG considerations will not go away. Management consulting will remain a fragmented business, with some large, high-profile consultancies dominant in serving the world's largest companies and many regional, small and niche consultancies serving everyone else. My fourth story is on the US venture capital industry. 2021 was a peak year for fundraising as well as investing. VC firms raised about $555 billion and deployed $747 billion. Fast forward 2 years and both fundraising and investments have slowed dramatically. The Financial Times reports that VC firms have raised less than $10 billion in the first quarter of 2024, a tenth of what was raised in 2023, which was itself a third of what was raised in 2021. Of the many explanations for this reversal, the most compelling explanation is that exit has become much harder. Fewer firms are going public. There were 154 IPOs in all of 2023, about a tenth of the number in 2021. And the number of acquisitions of VC-backed firms have fallen by almost a half in 2023. Furthermore, it is worth remembering that venture capital is a winners take most business. The top 2% of VC funds are estimated to capture 90% plus of all the profits. And even the top VC funds experience failure on the order of about 80%. VC investing is as much about having the right social networks as it is about knowledge of markets. And most VCs outside of a few major markets are unlikely to have the connections to get in on the best deals. Vinod Khosla is very harsh in his assessment of most venture capitalists. In his view, 70% contribute negatively to the firms they invest in. I expect the number of VC funds and the number of venture capitalists to shrink dramatically in the next few years. I also expect that the larger VC funds will get even larger in the years to come. Daniel Kahneman, the psychologist and 2002 winner of the Nobel Memorial Prize in Economic Sciences, passed away a week ago. I've been reading his 2021 book with Olivier Sibony and Cass Sunstein, Noise, A Flaw in Human Judgment, and want to share some thoughts on this book. The ideas of this book are simply stated. First, that people are inconsistent in the decisions they make. This is what the authors call noise. Second, people's decisions are influenced by all sorts of things, such as their mood, when they last ate, the weather, and more. Third, most people and organizations underestimate the level of noise in their decisions as well as the costs and consequences of them. And fourth, algorithms, checklists, and rules can reduce variability in decisions across occasions and across individuals. The book, as it is, runs 465 pages. In my opinion, the essential ideas could have been conveyed in half of that. Still, this is a book worth reading.